Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I just want to review the quick 5-minute update that I gave really early this morning, about 4 a.m. before the markets had opened. Just kind of a little pre-warning that there was likely to be either a significant dip or a deeper pullback than what we had already experienced as we were retesting the support that we had broken down from. So, of course, just on the really small time frames, Bitcoin had put in this little kind of head and shoulders pattern. To be honest, I'm a little bit leery of these type of patterns. Um, when it's so sloppy. I think on the 45 minute you can see it a little bit better. You can see there's a neckline right here, right? And then there's a deep, thrust to the downside right to the neckline, and then we make another shoulder. Now, the height of this one and this one are identical. So, in general, the price action was not moving significantly lower in my mind, or at least not very fast. Often, when you see these shoulders being much higher and then this shoulder being very low, it can indicate price action is overall moving to the downside, sort of like a distribution wedge. And then what you can just imagine by filling the blank is that price may pop to the downside. That's why head and shoulders and those kind of distribution wedges, have something in similar, which is that they can break to the downside. So what we had done from this, kind of just very, very short-term head and shoulders. Remember, this is a short-term formation that we were looking at. That's why I just made a 5-minute video. It's not like a macro video or anything, but there could have been macro implications, and I'll get to that. But what happened is that we did break down. So the formation began to play out. We hit our support that I had marked out on the chart. We retested the neckline, and this is where I made the video. I made the video right here suggesting that the measured move, if this does end up working out as a head and shoulders, would be down to these areas that could violate our support, right? And so you just want to be a little bit wary since we are at the neckline. We were at resistance. Remember, I wasn't making that video at support. I was making that video at resistance, that you might want to move up your stop losses or take a little bit of a profit on this little bounce that we had gotten. And so, if you had done that, it made sense. Now, what happened is that we continued to break down. So the formation played out. It retested the breakdown. It continued to break down. All of the indicators at this point suggested that we would likely have a path lower. But you have to remember one thing, and this is the grain of salt that I threw towards you when I said, if you look at the title, it says it may be a fake out, right? And I also put that in the description because, of course, we were so close to this support and this support, uh, pardon me, this resistance that we've likely flipped into support. And so it could have just been a fake out where we're just popping up. And if you look on maybe a 4 hour or something like that, then it doesn't look so much like a head and shoulders so much as it looks like a retest of the breakout. And so that was the thing that I had suggested in the previous video, where it could potentially be a bullish signal if we continue to the upside, and we would have to hold on to this blue zone here. We could break down to the green zone and do the same thing. It just would be much harder because we would have this overhead resistance. This is just a weak resistance. This is a much stronger resistance if we did get below that. And then, of course, we have this diagonal, which has been pretty strong, of a channel resistance, right? So if we just think about channels rather than supply and demand zones on the horizontals. But guys, understand this was just a little bit of a complex setup right here. So, I may have been a little bit over bearish, but really it was just about capital preservation. Since we were at resistance, right? It made sense to just save our money in this 22,000, 800-ish area in case this candle just broke all the way through and completed the measured move. Now, you can't win them all, and I can say that in some sense, I was wrong about the length of the move down, and there is still the potential for it, by the way. Even though this is basically a 1 hour, a 45-minute, if you this pattern has been put on the chart on the 45-minute scale, right? It's now been, almost like 6 or 8 hours, something like that, since it's been playing out, and most likely this is now invalidated. But it could, if this turns into a lower high, it could end up still playing out. However, this was a pretty good reaction on support, so that's why I'm making an update. Just to mention, keep in mind that we are relatively in this very bullish blue zone. That's why I do color coordinate these things for you guys. Again, if we're in this bluish zone, we're pretty bullish because our indicators, all of the momentum, basically, it's not really about the indicators, it's about the price action. So that just suggests that price action is bullish. The momentum has been maintained to the upside, and support, right? We've flipped resistance into support, and so we tested it here, and then we tested it again, and it held. So that's actually a good sign. This may suggest that we could even push up to that 26,000 level, or that some type of new pattern would be put in. And we also have this diagonal support here. Just going to roughly eyeball it for you, right? Something like this, let's say. This kind of diagonal support is also where we caught ourselves at, right? So you see this wick right here, it really did break down. So this support, this resistance that we flipped into support, this dashed line and this solid line, we actually did break through it, and we caught ourselves on this diagonal support, which has been more important for this kind of move to the upside. But you do see that we returned to this support line, and there was the chance that we could break down. So again, like if we zoom in, you can really see that we did break down significantly. And from my warning to there, it was about 3%, right? So that could have been anywhere from 6% to maybe 15% on some alts that may have reacted to the downside. So a pretty good place to just preserve your capital was the last video. However, I do want to make the update that it does look like we caught support, that we bounced kind of in an interesting way on these two resistances that we have now proven to have flipped into support. And we also, even though we wicked down, and that wick is on such a small time frame, it doesn't matter. It's not significant, right? Like it basically disappears on an hour time frame or above. But it is nice to see that this diagonal support still held up. Okay, it still held up. We wicked right down to it and we caught ourselves. So we did not break down on the measured move of that head and shoulders. We got caught on that diagonal support. And this is showing some strength in the chart in my mind. Okay. Again, I'm not going to take a very hard position right here. I think that the measured move was to 24,000. I still think that we have a chance to get to this very resistant area around 26,000, and maybe even play around with that area afterwards. But the question is, are we going to break down before we get there? And are we going to come and test like this diagonal support, which is looking less likely since this one held up and this one held up. In fact, we may have just solidly flipped this into support, and so we're going to have to find out. This blue zone that I have marked out for you, it may be holding, right? I mean, we tested it, we really stress tested it, and we didn't break down yet. So Pretty interesting sign for me. Not to beat a dead horse, let's jump over to the stock market. It was looking like the stock market was potentially going to dump. And of course, what it did is it did retrace, but it basically just captured, some of that liquidity. It basically, went to that supply zone and kind of just took off from there. It meandered around a little bit, but you can see that we did just pump up. So, is this thing going to eventually break back down and retest this, or, are we going to just continue flying? Honestly, I'm not sure. We do have that gap to fill still here, and that was the threat that we could break down, come back into this formation, and fill that gap before we pump up, and that would have brought Bitcoin significantly down. But what you can see on SPY, the S&P 500, is that we had rejected from that kind of CME gap, kind of a hole in the chart. You can see the price action just does not exist there. And now we have filled half of it. Now, I'm not sure why we rejected off of it. Um, it doesn't really make sense. We rejected almost to the dollar off of that CME gap, and that's what was making me think that maybe we were going to fill in these CME gaps to the downside first. Maybe the market didn't want to appear too bullish before a Fed meeting. But hey, guys, I mean, you have to be ready for anything in this market, and it turned around once, it turned around again, and then it turned around yet again. It was making a bearish M formation, on these smaller time frames. It actually broke down even lower, threatening like it was going to go and to fill in those lower gaps, which would have brought crypto just down to the ground. Crypto would have just crashed down. Look, this was a lower high, and we had broken down lower than our previous little area right here, right? So there was good reason, right? There was good reason to think, just to protect yourself in this area, because the chart was very indecisive. It wasn't quite clear what was going to happen, but ultimately this ended up being a W. We got a little bit of buy pressure. We held this resistance having been flipped into support, just like on Bitcoin. And so SPY is also just moving up. Looks like it wants to fill this CME gap completely. I'm not sure why it's going so slowly, but it is just creeping into that area. And there's a possibility that it could bounce off the top of that CME gap and then come back down to fill these ones, or it could do any number of things from here, just like we sort of got rejected from right here. Sometimes these gaps on the smaller time frames on stocks act as like supply and resistance, pardon me, support and resistance, and so you end up kind of bouncing around a little bit. But let's see what happens. Um, not looking too shabby on stocks right now. If we go over to the, let's go ahead and check the dollar. Yeah, see, look at this wild ride. Look at this crazy ride that the dollar went on. The dollar just dropped like crazy and it spiked like crazy and it's coming down again. So, we haven't seen a candle like that, since over here, right? And so, we just haven't seen a weird, wild move like that in, a week or so. And, we're putting in this kind of like little bit of indecisiveness on the chart. But overall, the dollar is starting to come back down to support, which would actually be bullish for the stock market. So if we do see the dollar continuing to come down, just that pump and this movement upward, right? This double bottom, you guys are seeing what I'm seeing, right? We had a double bottom on the dollar. And so when the dollar went up, it made sense to try to protect your capital in crypto and also in stocks, because we had a double bottom and the dollar was moving upwards. That's always a bad sign for stocks and crypto. So again, just to kind of justify the warning that I put out at 4 a.m. this morning, things were not looking that clear. Things were looking like they may have a little bit of a hiccup in the beginning of the morning. But now that the rest of the day has played out, we do see things coming back down to a little bit of an easier condition. We do see that price fought through this. And we also see that whereas the volatility had spiked back up and had threatened to actually move back up into this type of zone, which would have just made it very difficult to trade, that ended up being a fake out as well. Right, so we got a couple fake outs on these, challenges to the market. And look at this. You see this little high here? This wick actually ended up being higher than this one. And of course, increased volatility is bad for trading. So, we had to wait until this bullish formation completed. And then for the rest of the day, we had an easier chance, right? Again, just early this morning, things were a little bit more confused, a little bit more muddy, and it made sense to protect yourself. But obviously, the chart has just moved down. We're now having a lower low than this area, and so there is a good chance in my mind that this volatility continues to just drop lower. There is a good chance in my mind that perhaps this I mean, it's really hard to say with this formation because we also have this kind of thing going on where this is a fake out, this is a fake out. We could bounce up here, so I'm not going to give a hard prediction on that, but there's a good chance that we continue to break down, and maybe this thing is just rounding out finally. But it just this move was very weird. I would have to understand why that happened. Maybe something with the euro or whatnot. But let's go ahead and look at USDT. USDT also had a pump, just a nice pump up, kind of meandered around in the earlier day. We did have this trend to the upside. So again, it would have made sense this morning to just be on the protective side, of your assets. But it did end up making a double top and then breaking down. So hopefully this does continue to break to the downside. And again, I have this area marked out where hopefully USDT continues to move down, perhaps to the 6.15 area, or even if we're lucky enough, down to 5.32. Of course, USDT acts much like the dollar acts. The higher it is, the worse it is for markets. Specifically crypto markets, however, not the entire market. But the higher USDT goes, the worse it is for crypto. So if USDT is coming down again, right, then that would be a good sign for the markets that maybe we're just putting in a little bit of a lower high here, and maybe we can continue down. Now, the worst case scenario for this one would be that it's just making this kind of like ABC pattern or something like that, and then it thrust higher, right, after this little pullback. So just watch these things, watch volatility, watch the dollar, watch USDT. And if you guys are trading and you notice that they start flipping around in one direction, then, especially if all of them are flipping to the upside, right? If USDT, the dollar, and, volatility are, spiking up, all three of them together, then you may just want to be a little bit more on your toes. And if they relax, then you don't have to wait for me to put out an updated video or something like that. You don't have to wait for influencers to tell you what to do. The reason why I'm teaching you to look at the DXY, to look at the VIX, the VIX, and to look at USDT is because if you see them all getting bullish, that's bad. If you see those three loosening up and perhaps heading to the downside, then you can say, oh, it's turning around, so maybe I can get back into my trade to the upside, right? And then vice versa, or the other way is also true if you're shorting, right? So if you're shorting, then you want to see those things pointed to the upside. And if you're shorting and those things are pointed to the downside, right, then you may just want to double think you're short until they flip around. So, guys, you have to be a little bit strategic in this macro environment. The market is just being very volatile right now, very tricky, and you're not 100% sure how things are going to move. But at least right now, we are positioned that perhaps things have loosened up a little bit, that we have found a little bit of support, right there. And so we're pushing back up. And we are back into this bullish zone on Bitcoin, which suggests that it could potentially keep going, assuming that this doesn't end up being a lower high, right? Like just, hopefully this thing doesn't just turn around on us. But if we look at this formation, that's a pretty good formation. I mean, you know, we are softening a bit, but still pointed up. Some of these are starting to curl back up. So you see, we got the down move, and now we're starting to curl back up on these smaller time frames. On the 4 hour, we are starting to get a little bit of curl. So, we're still pointed down technically on the 4 hour, which makes sense, right? This could be just a lower high compared to this point, but we do have a chance to keep going. The 4 hour Stokes is pointed negative, but you can see it's also softening, and that's going to turn up above 23,600. So, I mean, it's a couple $100 away, but assuming that we can get to 23,600, then maybe we're pushing through this, right? And when we do have a breakdown on these type of volatilities, often we test the EMA, so we could just be curling up, and then we might come back all the way down to this blue line, sort of like the RSI, right? You can basically use the RSI for a similar purpose, and so again, like this could just be a lower high on the 4 hour. So we're still on watch for these things. However, you can see that the MACD is starting to soften in the last couple hours. And the RSI, again, similar to the volatility that I was pointing out, again, it could bump its head and just continue to go down. Oftentimes, these things make multiple formations on their way to the downside. You do see this solid bearish divergence that I had pointed out, which is what thrust us to the downside. But you also see some of this hidden bullish divergence, and you see, just a couple drives building up, and that could be a good sign in the short time frame. We're just gonna have to watch and see how this plays out. So my warning of like moving your stop losses up, if you had them down here or down here, you could have moved them up to the middle of this area, just to try to protect yourself while we were up here. Could have moved it to support. Um, but then you would want to make sure that you got back into your trades if things did end up looking bullish, or you could wait for a bigger confirmation, right? But again, like we don't know how this week is going to play out, especially with the Fed meeting coming up on the 27th, where they'll make a decision about interest rates. Um, but we do have a week to play around until then. So, guys, just to be on your toes. Again, this red line here is the weekly 9, basically the weekly 10 EMA. And getting above that would be very bullish. I mean, it would be like a first boss that we really need to defeat, other than that 200 MA we already pushed through and are now using as support, right? We've basically used the 200 MA as support for the first time. I mean, we got ahead of it, but we never really used it as support. And now we've just proven it with this wick and this wick, a couple 4-hour candles that we're now using the weekly 200 MA as support. And if we can do the same thing for the weekly 10 essentially, then again, it will be bullish. But, we could just meander in this area also, right? Because it could take a while to push up. And then maybe by that time, the Fed is going to make its decision. And so we could potentially carry out some type of move down here if the Fed is kind of negative, maybe to the 1800s or 1900s, and hopefully catch on this long-term resistance and hopefully catch it as support, which would also correspond with, of course, this channel that we've been kind of carving out. So if we do break down from the Fed, hopefully we catch ourselves in this area and we don't just go plummeting, but maybe make some type of double bottom or something. That would also look good, at least on the macro. But just wanted to do a little update from this morning's video, because the move did work out, but it ended up just being like a quarter day, half day move, and it didn't end up being the full bearish move. So good, we're holding in that bullish support area. And this is, again, why I'm marking out zones like this, so that you can be cautious if we start breaking down, past this area, but then you can just feel a little bit of relief if we do come back into this area. And of course, if we get into these green areas, it may be a pretty good chance to maybe add to your position, something like that. Because if we do have a drop of 10%, I prefer a drop of 15% to 20% before significantly adding to a position, and then taking profits after, after a 15%, 20% pump, right? Like, what was the pump on this one? 25%, right? So around 15 to 20%, I might just start taking profits. And then if I see some major resistance, I'll take the rest of the profit there. And then I'll wait for a pullback to add to my position, a significant one, not just a tiny little drop, but a significant one, in order to buy back in. And that way that you're not just trading every little up and down candle, but you're trading these kind of big moves. And the risk is that, you may be partially out of the market for a while, if it has just a massive pump, but you can decide to get back in on those things. And likewise, you don't want to just buy if it's just falling, right? You want to wait until you have some confirmation of support, which is why, yeah, we could have bought here, but, we had basically marked out a range. And so when we came back, and made a higher low, that's when I started saying, buy your positions at like 18,000, 800-ish, or on this even higher low here at 19,400-ish. This is where I was saying to buy, guys, right? And then we were able to have this whole move. Even if you forgot to take your profit, we still made a higher low here. You could have bought in again, and then we had this entire move. And so we bought at these very low risk areas. We didn't buy a falling knife. And likewise, you want to take your profit strategically. So we took profit at 24,000. And then just looking for a chance to get into a major position again. Now, if this diagonal does end up holding, and if we do end up holding this 200 very strongly, and this just keeps getting tested, and it looks like we're accumulating and about to pop up or something like that, then that would, then when we break this resistance, that could also be a signal to get back in. And you can do that with limit orders, or you can just eyeball it, or you can, get in on these type of retracements, depending upon your risk threshold. It all depends on where your stop loss is, right? What are you risking versus what do you think that we can get out of it? Because the risk is that we continue to fall, right? Not much more to add to that. Just wanted to kind of have a conversation, and we'll probably just throw up this video as well. Nothing too serious going on. Just waiting at this point for the next week for the Fed to make its decision. Again, I don't like to necessarily be trading areas that are starting to get a little bit complicated. I feel like we're very close to resistance, right? I would prefer to buy in at better, just kind of like juicier lows. And so I was hoping for this pullback to be deeper because I would have loved to buy in at this level after having taken a majority profit up here. But the fact that we caught this as support and it's just not clear if we're going to continue to break down or if this is just going to continue to go. I'm just chilling out, just waiting for the market to show me what it's going to do to kind of reveal its hand. But it does start to look like this is being flipped into solid support. This threatened breakdown didn't happen. And so again, it's a good sign that maybe this is now our support for real. And just watch this space, guys. Like we may be fully out of this, right? So just watch this space. Of course, the Fed can smack us back down, but I will be considering potentially re-entering soon if this area does hold. All right, guys, that was your alpha for the day, and stay safe and happy trading.